the private equity transaction happens when the companies are making a losses. If they make a losses of 10 crores a day, banks will never finance such type of transactions, but the private equity players who does it. There have been the investments of private equity across the size, across the sectors, be it the small size company, mid-cap, large corporates, very large corporates, listed, unlisted. In case of listed, there is a huge scope of M&A activity because the investor may come at the holdco level or at the subsidiary level, considering the objective of that investment and the multiple guidelines applications that makes the one challenging for investment. One of the report which has been done by the McKinsey, which says that the private equity investor is there, the revenues of those companies are higher. And they compare that where the investment is there, that they have the 28% higher revenues as compared to companies where there is no private equity gross revenues. Even the profitability of total earnings increases, the percentage of employment increases, percentage of exports increases, not only this, and the probability of having a cross-border transactions, first time cross-border transactions is higher in case of the companies which are having the private equity. No doubt, there are equally a large number of challenges. If you look at Indian scenario, we don't find the good assets what they look at for the private equity, that's a challenge. Even there is a challenging regulatory environment which gives the various things, issues what we had in the letters we heard. Similarly, there is exit options, the ones the investor is that we will get exit or. And another thing that the private equity investor invests in the company, they have the limitation of controlling company because the shareholding ownership is limited and they may not have tried to control the promoters and that may create some issues. Recently in the newspaper what we are seeing that the private equity investors are there, the income tax department has taken a very extreme view that investments which have been followed, the value of the investments which have been followed, or where they say that this company don't have it, but they didn't understand the business, and they say that the higher premium what they paid to for investments is nothing but this one kind of money laundering what they say, and they added to the things. There is also been litigations we have heard when the private equity investors have been there. For example, in the public domain for the Lilliput, where there is a huge litigation which happened. So on so things, but still private equity has as one of the source of investments. And to hear this, we have a very good speaker on the Mr. Bhavesh is there. And before he speaks, may I request our committee member, C.A. Sullivan Nayak, to introduce him.
Good morning, friends. I am privileged to introduce Mr. Bhavesh for this session. My association with Bhavesh is more than 2 decades. Since the time he joined International, and that's more than 3 decades. This M&A and corporate restructuring is the flagship seminar of our corporate committee member of the Chamber of Tax Consultants. When this time when we thought of holding it, Sujay asked me that he wanted a speaker from our company. Then I identified Bhavesh. Bhavesh is a very busy person, but when I requested him, he was not able to say no. That's why he is here today. He has got rich experience in private equity business. He is going to share that with us. I am sure you are all going to be immensely benefited by his experience. Without wasting much time, I am requesting Bhavesh to take over the session. Before that, I request Mr. Padar Sahaba to hand over a memento to Mr. Bhavesh as a token of our love and affection.
Yes.
Thank you, Mr. Nayak. And thanks, Paras, for the lovely introduction. You've done half of my job here already. And thank you to the tax Chamber of Tax Consultants and the members. Thank you for calling me here. It's a privilege to be here and talking to you guys. So today we've been having a series of heavy sessions, corporate structuring, and then we will have some more heavy sessions in terms of valuation, etc. But this is just more the glamorous part of it, the private equity funding. So it's going to appetize you for lunch even more. So the way I'm going to take you through this presentation today, I'm going to talk to you about the introduction to private equity, what does it mean, what is the private equity environment in India, what is the global scenario, that's where the money comes from, so how are things looking like over there. Paras mentioned about exits, we will touch upon that aspect also. What are the processes, documentation for a deal to get done, which is important from an investment banker's perspective, which is where I come from. And what are the general challenges that this kind of investment sees? So the introduction to private equity. What is the role of a private equity as a source of capital? Private equity capital is a very different kind of capital which can take various different forms and shapes and give a corporate a customized solution to what their need is, irrespective of their life cycle. So when a company is being formed, you can actually take money as a venture capital or a seed capital. Once the company begins to grow, you can take something known as a growth capital, because that is the money that is now required for the growth. You already established a concept, you established some track record of your business, and now you need a partner or capital for the growth to the next level. In between, you may think about raising money, but you don't wish to dilute so much because you already are at a stage where you're growing, but you see a lot more growth going to happen. But you still need capital. The question is, if you raise capital at this level, it will lead to more dilution because you may not get the same valuation as you may get maybe 2 years down the line. The question is, can you do a structured finance where dilution could be lower? Eventually, the company potentially goes for an IPO where the private equity investors can come again as a pre-IPO investor. They could take a stake to provide a benchmark valuation which can be used by the IPO investors as a benchmark for the valuation. Sometimes private equity investors take part in the IPO itself. Sometimes they take part in the QIP, which is a listed company raising money by it's called a qualified institutional placement. We've now seen more and more private equity take part in that as well. Or it could be a PIPE, which is preferential or a private investment in a public enterprise. This is by way of a preferential issue. It's a one-on-one deal which happens subject to SEBI regulations. Or it could be a complete buyout. And buyout could actually take place in some situations that the erstwhile speakers and the eventual speakers who talk about corporate restructuring, and private equity does play an important role over there. So assuming there's a large conglomerate with a lot of divisions in it, and you're thinking about selling a division out